Welcome back to Investor Edge, simplifying smarter investing for everyone. I'm your host, Trent. Today is February 6th, Thursday. Today I'm going to be talking about a little bit market review, some forward thinking in the tech sector, and just overall market sentiment, and a few positions I'm in as far as my swing trades go. Missed opportunities on a couple, but no big deal, or not missed, but just didn't want to take because it's outside my realm that I like to be within. Just a reminder, this is for educational purposes. Do not participate in any trading or take this as investment advice. Please consult a financial advisor. Markets are risky. Do not put any money in the market that you are not okay with potentially losing. That being said, let's pull up the notes. Okay, February 6th, swing trade, watch updates. I am in 3 positions. I bought them all on the same day, pretty much the same time. I liked what I was seeing, and I put starter positions on for all of them, and with the expectation that usually when I buy stuff, it goes down a little bit to further support, and I'll buy in a little more. However, so far, doing okay. So Meta, I bought the other day literally yesterday at 704.62. After that big spike, really pulled back hard. I was like, you know what, I'm going to put a little bit out there, and I'll show you what I was looking at and how I set up for my swings. If you watch a previous video, I believe I was talking about these 3 along with the other ones mentioned. I'm going to talk about below. KGC, Kinross Gold, got in at 1170. Closed really strong today. I like that a lot. Wasn't so certain going into it, but with swing trades, I'm always going to hold into, especially at the close. I really want to know where it's closing at. That's what I'm most focused on. GE 202.48. That's where I bought in the other day. So today, markets mixed results, pretty flat overall. We're talking less than 0.5% other than the Q or NASDAQ. The Qs rose by 0.5%. A lot of things were continuing to wait on earnings. Amazon reported today, and a few others. Fortinet, one of the ones that was on my watch for trade. After hours, if you did take that trade, great. It's up. But I do not like to trade or swing in earnings. Blend of strong earnings, report companies, blah, blah, blah. This was mainly from today. Philip Morris, good old Philip Morris. That's not a swing for me. It's one of my long-term holds, and I'm going to make a video for my long-term portfolio. Philip Morris had one of its best days I've seen in a long time, so it was great. And that confirms some of my thought process that I was talking about. Tech is still pretty mixed. However, there is strength within tech, so I love to trade tech stocks. Obviously, I'm in Meta. That's been the driving force to kind of save the tech industry or tech index overall, right? A lot of things have been getting hammered. We're going to talk about that. We'll pull up Amazon. I think this is just my own, assessment, what I'm looking at as far as short term. When I'm saying short swing trading term, I'm looking at within the week, just outside of a week time frames. I'm not thinking multi-weeks. Multi-weeks is a little different for me. It's more of a positional type trading, not necessarily a swing trading. It can be, but for me, swing trading, I'm looking, ideally 48 to 72 hours is where I want to be profitable and go ahead and get out. I'll buy in the first couple days if I'm seeing this continuation, and then I'll be selling out once I reach certain levels that make sense based on what the stock normally moves, unless it does something crazy and really pops, right? Then maybe I'll leave more on the table. That's just my own strategy. You have to kind of develop your own. Market remains defensive posture. Post-earnings sell-offs, right? Major tech stocks, Amazon, Apple. Amazon's going to open down tomorrow. Earnings came out, and a lot of it has to do with earnings aren't necessarily bad. This signals a cautious sentiment where forward guidance is more important to investors than a recent earnings beat. Certain tech sector. Tech sector is so big, you have to look at it kind of broken up into its own individual industries, or what they do within the sector, right? But overall, tech sector could continue to drag. I think that's why you're seeing, things that are doing well are going to continue to do well, and things that are in those fields are not going to do so well in the short term. Shopify was on my watch. It's down a little bit. Shopify has been under pressure due to overall weakness in growth stocks and tech-driven pullbacks. I think this could be a really good potential bounce. We're going to pull that up and look at it. What to watch, 115 is key support level if it breaks. That's just kind of a big, broad term. That's whole dollar type deal. Shop's e-commerce fundamentals solid, but it's environment, high growth companies. Yeah, high growth stuff, lofty valuations may face selling pressure, but it's not, I wouldn't put too much weight in that. Let's see, Meta up today again. Had a really weird. I bought on some weakness yesterday, and I was like, I don't know, but I'm gonna jump into it. It's been strong. Trust in the strength until everything else changes. It has been really going strong with all the other bigger tech companies not doing so well. Apple up slightly. That's still on my watch. I want to see it get back above the 240s. That's kind of what I'm watching for. I wouldn't really say I'm a buyer at 230. A lot of people are talking about the 230s or being, support. I want to see the strength follow through. I don't, I've mentioned before, I don't want to just be right. I want to be right when it's actually moving. I'm not just going to try and pick the bottoms or the numbers. If it works out that way, it does. But I want to see a little bit more follow through, and then that'll start to filter me in, because right now I believe it's still below certain things that I want, and again, just for my own sake. Fortinet was on watch. I didn't take anything in it, even though it was kind of looking good. Pulled back slightly. It gapped overnight, or it's going to gap overnight. It's up after hours. GE, slightly moving up. This kind of buys into my, sentiment of defensive type stocks. And defensive, that including some of the tech defensive stuff, right? That's what I'm curious to see about Apple. Is Apple going to rebound from their kind of volatile earnings last week? Is Amazon going to drag anything else with it? Or is Amazon going to bounce? Who knows, right? Amazon will probably be something I may day trade tomorrow. But overall, more defensive type stuff seems to be continuing to hold levels and move a little bit stronger. Not necessarily big, but I like what I'm seeing. So Kinross Gold, really strong close at the end of the day. I liked it. Broader trend into commodities potentially, right? Bitcoin kind of being down, some of the cryptos being down. Gold trades inverse to Bitcoin to a degree. Again, I think a lot of this forward guidance from these big tech companies has been hurting them, and therefore people are starting to rotate out, try to get more defensive. I want to see it push above 12, ideally 12 plus 1250. Again, it broke 52-week highs last week, broke 52 high this week. Earnings are next week. I'll be out before earnings most likely, unless it's really looking strong, or at least take some off the table. Again, I don't want to hold through earnings. I just don't. It's just not my type of play. It can work out really good. I'll show you differences. This is my own interpretation. If things continue, I want to, again, every day changes just a little bit, but so far what I'm seeing, potential rotation to defensive names. There's strength in GE. Kinross Gold indicates that investors are seeking stability in industrials, hedging against some of the tech volatility. There's continued reports coming out, so we got to be watching those. Qualcomm was one of the ones gapped down today. Bad guidance, decent earnings, bad guidance. So that kind of stuff, right? Amazon's going to do it tomorrow. So that is telling me, there's still strength within tech. And a lot of it I talked about in some of my day trading. A lot of the software companies gapping up, doing really good. So there's still things out there. That's why, Meta kind of does it all. And that's why I think they're still looking strong too. I'm going to see if that follows through for tomorrow and continues on. All right, let's go ahead and pull up some charts. All right, first one, Meta. So these are 60-minute candles on just an E-Trade setup view that I have. I have your simple MACD down below. I like RSI, just keeping the standard settings. What I really focus on, this red line is anchored VWAP off of last week, Monday. I like to zoom it out a little bit. It helps me just envision the continuation of the trend. And then I set one for the beginning of the new week, and I want to watch how it plays around that. So you can see, kind of circle the area that I bought into. It's pretty aggressive. This was a really ugly candle. I did not love it. I should have waited for this. I don't remember exactly what I was seeing. Maybe I was watching some of the tape during that 60-minute time frame, because I do day trade. So I was, I kind of had some watches on that. Did not expect that, right? When it started ripping at the morning the other day, it was a pretty big move. I mean, again, 52. It hit 52-week highs. It did it. What, did it break it today? No, I guess it didn't. High of 718.14, 718.90. Yeah, so 2 days in a row broke 52-week highs. Not significant. Definitely there's some selling pressure. It looks like going on up there, but strong close. Going to continue to stay in it. What's going to keep me in it? And what I'll keep buying is these retests off of this week's anchored VWAP, or even slightly below. I'll put a stop in, as it breaks, significance below that, right? If we start holding a candle 1% or so, or 1.5%, 2% below that, I'll probably start to scale out at least some of it, if not all of it. So yeah, what I like to see is the anchored VWAPs that I set in place continue to move above or stay above one another, and the shorter time frame, the one from yesterday, I usually carry the 2-day. I want to see it either close above the 2-day or the day of anchored VWAP 2, or even just the regular VWAP. So what's this, the open? So yeah, slightly below, but everything's still kind of intact. You can see that visual trend, right? We're still climbing to a degree. We're not really flatlining, and we're not really declining at all, right? That'll be my first kind of sign of weakness. And I'm going to look at it on larger time frame. 60-minute I like. It's fast enough yet slow enough for me. The 2 hours nice too. Just keeps me moving. Yeah, that was a really fun one to watch yesterday. All right, let's just go ahead and jump over to the next one. Let's pull up all the ones that I'm in. We'll pull up KGC, Kinross Gold. Let's pull back up to 60. So I bought in at the open, the break of, I was in at 1170. So yeah, it was the break of that 1168, previous day's high, and also previous day's opening range. Bought in there, got a little sloppy coming back to it, but tested, bounced this morning. That's what you like to see. You want to see continued strength. Should have added a little. I still have only half what I normally would go in with. But what I really want to show you is what you want to see, or what you like to see, is that real strong close, right? That is telling you the close is the most important thing. Now, if you have a really, or kind of flat close, a really weak close may not be the end of the world, right? But it's definitely a sign for caution. If it crumbled below my entry, I would really be watching this closely the next day at the open. I want to see what does the price action look like going into it. Again, I still think you have to be pretty active when you're doing this type of swing trading. Now, people call it different things. I think anything that's I plan to have this more than 2 days, less than 5 typically. I still call that a swing trade, right? It's short-term trading. You still need to monitor the daily. I want to see the open is important to me to a degree, but really the most important is the close. And seeing that strength into the close is beautiful. That's what's going to keep me in this. Maybe a little pullback tomorrow, And when I start to see reclaim of strength, I'll probably be adding to my position, depending on what overall broad market is looking like. GE, same thing, prime example. Look at that close, I love it. It started to fade, like in the last hour or so, and then just buyers bidding it up, stepping in, reclaiming what it closed at the high of day. What was the high of day? High of 206.10, right at it. So love it. That's strength into the close is definitely always a good sign, right? Moving on, zoom back after the 60s. Yeah, that's perfect. Again, see the open, it's good, but if you're watching levels, whatever those levels may be, it could be previous days, high, previous days low. You could use Fibonacci retracements if you had some big extended move, right? I'm sure if you took a Fibonacci from here to here, a high to a low, or a low to a high, and did a retracement, this is probably right at the 50% level. I think I talked about that last time. But it happens to also be at my anchor view app. It just depends on the views that you want to do. A lot of these, again, these are all indicators. Everything is focused on volume and price action. That's what you should be focused on. I like view apps because they're simple to me to understand that, and that's what it's calculated all the time. And I put a few of them on there over different periods, and I want to maintain that, buying in the areas of these levels become confluence and continuation. But again, who knows? Thing is with swing trades or anything overnight, it could gap down tomorrow, and you totally reset, right? It could gap up like that, vice versa. So that's part of the risk with it, with overnight trading. Now, what else we got? Ooh, FTNT. That was on my watch. And let's look at the extended hours. That's sucks about, for me, I don't like to trade through earnings unless it's my long-term portfolio stuff, because that's just going to inherently happen. But if I had a stop in there, I would have got stopped out most likely, but who knows. But that's just pretty. That's what you want to see. So yeah, probably, I don't know what their guidance or earnings look like, but yeah, a lot of these software, this is where I'm talking about tech within, or strength within the tech sector. A lot of software is doing really good. I think Net was one of them. That's not one of the ones I'm watching, but yeah, same thing. Really good. And meanwhile, here's an example of why I don't like to trade or hold through earnings. Amazon got killed. In that first 15 minutes, it got all the way down to 222 from 238. Significant move. We're down. It's down about 7% or so right now. That's the prime example. Yeah, you could be right many times. It just takes a couple to be wrong, and when you're wrong, it really sucks. Let's pull up I forgot what the other ones were. Shopify, and I already talked about Fortinet, GE, I'm in, Kinross Gold. Was the Apple, I guess we'd pull up. Is that one of the ones on my list? Apple, yeah. Apple and Shopify. Turn the extended hours back off. So with Apple, for me, I want it to be, I don't like taking a swing long when it's below the anchored moving VWAP of last week. That's what that red line is indicating to me. You can see in strong weeks, we're constantly respecting that more so than ever, and it really ripped off it. That's not going to happen every time, right? But that's just a prime example. It's probably, I guess it was there as anchor view app. It doesn't really move after the fact. So what I want to see, and it's, so 233 is where it currently sits. Ideally, I still see some resistance even above it slightly. I want to see it get above, reclaim. I want to start seeing it test the 240s. I want to see the shorter time frame anchored moving volume weighted average prices move above that as well. I don't like the fact that this week is below last week, and we're in this like mid-range bound. It could break. Like it definitely could. There could be, it could totally do the opposite of Amazon, just because it's Apple. That's just not a technical setup that I like to look at. Other people have different factors. You could be looking at just a simple break of, have a trend lines. I'm sure you could write up some sort of trend lines looking at this in a certain way, and it's forming some sort of wedge, and it's going to break to the upside. And you could totally be right. It's just a matter of how you like to look at things, and mine is based on my experiences and probability and what has worked for me, and I want to repeat that. Shopify. See, this is the difference between, is that a strong close? No, it is a. That is some. What do we call it? Shorts closing their position, maybe. I don't really see too much strength in that. Did they have earnings? They have earnings on the 11th. Why is my mouse working? I believe they have earnings on the 11th. But I was getting interested in here when, as you can see, we, over the last couple days, recovered through. We could be seeing a potential bounce here. I don't like the fact that it started to give up all that ground it made. That's one of the things with tech. It does move a lot more, especially, and maybe I shouldn't be so picky, but I'm already in a few things. And, I try to focus on just a few stocks at a time and focus on the ones that, in my opinion, have the best probabilities and setups for the moves I'm looking for them to make. The range is not, not typical, right? We've seen this, up to the 121s, down to the 110s, and full recovery, and now we're back down. So yeah, it's kind of like, I want to see it have a little bit more consistency, right? You want to see things like last week where we're up above, we gap higher, move strongly, basically trade sideways, and start to grind higher. Did it make a huge move? No, but it, anything breaking above this, I'm sure there was, if I move these back, you'll see that they were bouncing off shorter time frame moving averages or anchor VWAPs, whatever you want to look at. Anyways, that's it for today. Like, subscribe, comment. Let me know if what you guys are trading, what you're interested in. I appreciate any feedback. Thanks.